Tesla, it's about to go through a 5-for-1 stock split. Now, normally that shouldn't matter for a stock, but in this market, it could have a huge effect on the market cap. And that's what we're gonna talk about in this video. And if you wanna learn our strategy for how we trade Tesla and other stocks just like it, check out our free training. There's a link in this video and down below in the description and comments. This is the strategy that I use and that most of our Fallible members use too. Super easy, very effective. It's all explained in this training. Now, a 5-for-1 stock split means that every one share of Tesla is gonna become 5 shares. So if you're holding 1 share, then pretty soon you're gonna have 5. And this is happening end of August, early September. But just because the stock is splitting, that doesn't mean you're 5 times richer. Because what happens is that those 5 shares combined equal the worth of that 1 share. The total value doesn't change. So if 1 share of Tesla is worth $1,500 right now, then when it breaks into 5 shares, each one of those shares will be worth $300. But the total value and the total market cap is the same. So theoretically, it shouldn't have any effect on the stock price. But that's just theory, because in reality, it does. Not because of math or numbers or something like that, because we know that doesn't matter in the stock market. All that matters is psychology, and that's why these companies do stock splits in the first place. So originally, the idea of a stock split was to make shares more accessible for more investors, because each share is cheaper, right? A lot more people will be able to buy Tesla shares if they're around $300 a share versus if each one is $1,500. Now, that used to be the idea behind it, and it had some validity, but nowadays with fractional shares, it doesn't really matter. And fractional shares are when you can buy a piece of a share. So if you bought a fifth of a Tesla share, then it would be $300 and you would have ownership. So nowadays a stock split shouldn't matter because everybody's getting access to this new financial innovation. But again, it comes back to psychology. And the truth is, most people don't understand what a stock split actually is. And you could really see that if you go read some comments on Twitter or Reddit. People are saying that Elon just got 5 times richer somehow. Or they're saying, hey, this is the best trade I ever made. I had 1 share and now I have 5. I must be a genius. So a lot of people have no clue how it actually works, but they get excited about it. And that is good for the stock. And a big issue I see with beginners and inexperienced people in the market is that they think in terms of shares instead of market cap, meaning that they think more shares is more valuable than fewer shares, regardless of how those shares are priced. So I've literally heard questions of people asking, why would I buy 1 share of something at $1,500 where I could buy 1,500 shares of this one stock at $1? It's a lot more bang for my buck. And they say this with no regard to fundamentals or anything else about the stock, even the price. The idea is just that, hey, more shares must be more valuable. I'd rather have more than less, which you know doesn't actually make sense in the stock market because the amount of shares matters almost not at all. But it is a good lesson in how you should think about the numbers in the stock market. You should always be thinking in percentages, not in dollars and not in the amount of shares, because percentages stay the same regardless of how small or big your account is. And that's very important for emotional control. So the whole point of investing is for your account to grow over time, right? And if that's happening and you're focused on the dollar amounts for how you're evaluating it, well, that is going to emotionally screw you, because all of a sudden the numbers get bigger and you start getting more worried and you make bad decisions. What's better is if you just look at percentages, because 10% is 10%, regardless if it's $1,000 or $100,000. So a lot of people, if they lose 10% on $1,000, they don't care. They're like, what? It was just $100. I can make that back real quick. Then they lose 10% on $100,000 and they're like, oh my God, that was $1,000. It's going to take me forever to make. Now, in reality, if you're looking at that properly, it should be the same emotional reaction to both amounts, because 10% is 10%. Emotions really become the most important thing that you need to control in this investing game. And what I was just talking about before, equating how much you lose to how much you can make through your job, is a terrible way to go about things. And it's not just losing too, it's making money as well. If you think, oh, I just made $1,000, I can buy a new laptop now, you're gonna be in for some pain. Because if you're assigning every dollar you make to something you're gonna buy, then every time you lose those dollars, you're gonna feel horrible about it. The best way to approach it is to keep your trading account or your savings completely separate from your spending. Whatever happens there happens, you're not gonna touch it, because you don't wanna be dipping in there, pulling money out, trying to purchase this and that. That's gonna kill your long-term returns because it kills your compounding. And like I was saying before, it's gonna screw with your emotions. You can't see yourself losing a laptop every day. You won't survive. Going back to the Tesla stock split, if you think investors can't be this stupid to fall for a stock split and get all bullish about it, well, you'd be wrong. Stupidity moves stock prices all the time. There's been a ton of research done on ticker names and how a catchy one will boost the stock price. There's also been a bunch of examples of people confusing different tickers. For example, when Twitter was planning to IPO in 2013, this closed down old electronics retailer called Tweeter Entertainment, their stock price rocketed 1800%. And that's because all these investors thought it was Twitter. Now I could understand reading it wrong or checking into the Twitter company and then realizing, oh, this isn't the same company, but actually going and buying it means you did no research at all. You didn't even read the name of the company, you just bought the shares. And this isn't just one person, it's a bunch of people. That's how the thing shot up 1800%. Same thing happened with weed stocks when they got popular. People started buying ticker symbols that revolved around pot, which happened to be potash, which is not weed. It's an agricultural product, and companies centered around that. Those stocks took off. And that's what they talk about when they talk about dumb money in the market. You're not dumb for not knowing, but you're dumb for putting your money in without doing even a modicum of research. Like just a quick Google search, or even just reading what pops up on your brokerage account when you type a certain ticker in. But people get excited and they buy, and that's what moves prices. Sentiment moves stocks more than anything else. That's why I always say that this entire game is psychology, which also goes back to our argument that we made many times on this channel, how Tesla bears are just stupid. If people are this excited about Tesla, you don't want to be standing in front of that train trying to short the stock. You're going to get blown out every time, which is exactly what happened to these shorts. But they believe so strongly in their thesis that Tesla is a fraud, or whatever else they believe, that they don't care. They decided to die on that hill, which they will. And in this case for Tesla, I think the stupidity is great, or the dumb money is awesome, because all that money is working for Tesla and Elon. And Elon is doing the most important work there is. So I'm all for it. I'm all for all the stock splits because, he knew that was going to boost the stock price. I was up for his secondary offering that he made a few months ago. Great strategy. Collect money while you can. This isn't some evil company that's only worried about profits and will screw over everybody to get them. Elon's actually trying to do something for everybody. So I love seeing the stock price take off. Now, the second reason they originally had stock splits was for liquidity, because the number of shares actually does increase. And while that doesn't affect the market cap, or it shouldn't, it does affect how many shares are physically traded. And when you have more shares being traded back and forth, you could technically get a more efficient price. So the bid-ask spreads are better and it becomes a more efficient market. But again, fractionalization kind of helped with all that anyway. And nowadays markets are very efficient as it is. Now, as we said this whole video, a stock split should not affect the price or the market cap of the company. But in Tesla's case, you could see that it clearly does. Tesla has rocketed higher. It's up over 20% since the announcement of the stock split. Again, do people know what's actually going on? I don't know. At least it's a company that we could all get behind though. And when we were last talking about Tesla, we talked about how after earnings, the stock price collapsed a bit. And I was tracing this pattern right here saying there was a tight consolidation happening. And what we wanted to see was a break either upward or downward. Because whenever you see a consolidation, which is prices getting tighter and tighter in their trading range, there's going to be a break or an explosion in a direction. And in this case, we had that inflection point is what I called it. So the earnings came out, Tesla beat, and they surpassed expectations, but at the same time the stock price fell, which is a very bearish sign on good fundamental news. But then what we saw happen, instead of the breakdown following through, so stock price going lower and lower, it held really steady right here. You can see this is another super tight consolidation. Price is barely moving around. And what that means is that there are enough buyers to meet every seller. And it also means that there's a lot of people that aren't selling. They're strong hands is what you could call them. And that's really what you need for a stock price to go higher and higher. So people don't want to let go of their Tesla shares. So because of that action, what we really saw happen was this pattern morph. So instead of being this triangle, and this is getting into technical analysis here, it became more of a rectangle like this. And you can even extend this line up here too. Now, instead of there being a triangle right here, you could see this is a longer term consolidation. And Tesla seems to be trading within this range. You could see even in this down day where it looked like it was going to break, it stopped right there, right close to this previous consolidation right here. And then that announcement came and you saw the share price rocket higher. And then once again, as of this recording, it's stopping at the high end of this line. So a question we can ask ourselves is, was this another inflection point? Because this is fundamental news, right? And even though it shouldn't affect the market cap, clearly it did. And it kind of gave us a clue that sentiment is still alive and strong for this stock. Now, if it fails here, in the sense that it doesn't go past this line or this price level, I would think we would continue to see sideways consolidation for a while. So you'll keep seeing it going up and down within this range. But if it breaks out and heads higher, which is very possible given that the overall market is so strong. NASDAQ keeps heading higher. S&P is about to hit all-time highs. Well, if that's the case and you have the stock breaking out and the general market supporting it, then it could be a really good entry point. And if it does take off and keep going, we could say, hey, that stock split was an inflection point and it really turned things around. Now, in our strategy, the one I talk about here in this free training, we've been in Tesla since April 1st. So we've ridden it all the way up. And even during this consolidation period, we have not sold. So technically we would be considered some of those strong hands. So obviously if this breaks higher, it would help us out. And the reason we've been long all this time is because Tesla's momentum has just not stopped. And the way we measure that momentum is not just by looking at the chart, but by actually analyzing it with the TSI scanner. So the TSI scanner tells us what the highest momentum stocks in the NASDAQ are. And you can see right here, Tesla is number 2. So if it has strong momentum and a high TSI number, there's a good chance the stock price will continue higher. And that's the reason why we're holding through. Now, of course, we also have a stop on here. So if the price does fall far enough, we will sell the rest of our position and lock in those gains. That's not to say that we're bearish on Tesla. That's just trade management. Even though we love Tesla and we love Elon, you know, we still got to protect our money. And just because we got out does not mean that we're not going to get back in. For example, back here when Tesla collapsed with the CCPV pandemic, we got out, but then we got back in. And that's the April 1st that I was talking about. And we've ridden it all the way back up. So with our strategy, we're really trading around these large trends. We try to sit in them as much as we can, but we will always have that strong risk control. Because even if we're huge Tesla fans, we know we can be wrong about the stock, and who knows what it's going to do. That's why this channel is called Fallible, because we're open to new information and open to being wrong. That's where risk control comes in, which is the most important thing in investing. So if you want to learn more about that strategy and how we use it to trade Tesla and all the other NASDAQ stocks, definitely check out this free training. There's a link in this video and down below in the description and comments. It's free and it's worth your time. And if you like this video, make sure you subscribe because we do a bunch of these. Subscribe and I will see you in the next one. Stay fallible out there. Bye.